Hey everyone, my name's Andy. My channel's Finding Value. If you guys like the commodities boom that's coming up, subscribe, and if you like this comment, click the thumbs up button. I'm going to do a quick ratio update here, just to show you kind of what the ratios are at and what they look like currently. So this is a ratio update. Ratios tell us relative value against other assets. They tell us where we are value-wise and are we at a buy or sell indicators. They also reveal market conditions depending on increasing or decreasing ratios. I used stock charts and macro trends for these charts. So what we have here is the Dow to gold ratio. It's in a sideways channel. It's at 16 to 1. And I'm going to go to 1. This is what it looks like on a long term. So this is the short term basis. We're at 16 to 1. So that's Dow is 16 units Dow to 1 ounce of gold. This is what it looks like historically. Obviously, we broken the uptrend and we're in a downtrend right now. It is popped back up a little bit, but we're eventually going to go, which was going to be a shoulder, a head, and probably a shoulder pattern, which is going to come all the way back down. And I've got a green circle circled here. This is where it could potentially go in the future, is off this bottom, we'll call it a megaphone pattern. So it could be way down there. So we're at 16, we're kind of at the upper channel, and I'm expecting this to decline. Now, this is the gold to silver ratio on a long-term perspective. If you look, I've just plotted this. We briefly went above it during the COVID scare. This is what the bottom looks like. I'm expecting this to go to a 20 to 1 or 18 to 1 ratio, which means silver is going to drastically outperform a whole bunch of other assets, especially gold. And this is what it looks like zoomed in. We've got this sideways channel here. We've broken to the downside of this channel, which means that the ratio is compressing in relationship to gold. So I expect this to go down very soon. Next is the gold to oil ratio. We have this anomaly here, which went all the way up to 90 barrels to 1 ounce gold. We're right now at, I think, 39. Yep, 39. And we're declining. We'll come back into this channel here, and I'm expecting it to go below. This is a 10 to 1 ratio. It could go all the way down to 4 to 5, 6 to 1 ratio in relationship to gold. And if gold's going up at the same time that this ratio is compressing, I expect an outperformance of oil in relationship to gold. This is the current oil to gold ratio. It is declining, which means oil is outperforming gold, and we're at 39.12. This obviously could go back up if gold has a big rally soon, but I expect it throughout this commodity bull market for oil to outperform gold over the next 5 to 10 years or however long this lasts. Next is the gold to natural gas ratio. We're at the top of the band right here. I would expect natural gas to outperform gold, or natural gas to outperform oil over the next coming weeks or months. Next is the gold to copper ratio. You can see we popped out of this pattern to the downside where copper was outperforming gold. We've got a nice bullish engulfing here of the candlestick before it, which typically means that we might come back up. We'll see where this pattern breaks. If it's either to the upside or the downside, we'll continue to monitor it. But if it breaks to the upside, gold's outperforming copper. And I think that's what's going to happen coming up here shortly, is that gold's going to have an outperformance of copper. Next is the gold to platinum ratio. And you can see that it broke to the downside, signaling that platinum's going to outperform gold. We were in this consolidation little pattern down here, and we're coming back down. I expect platinum to do very well in the future, especially in dollar terms and in ratio terms. I think platinum's going to do exceptionally well. That is why I hold lots of physical platinum. Next is the 10-year U.S. Treasury yield. And you can see this guy is coiling up It's right at the tip of this large pattern. And I'm very curious to see what happens. Are they going to buy this thing, they being the Federal Reserve? Are they going to continue to try to suppress this? Or are they even suppressing it at this moment? But I'd like to see this thing, I'm expecting it to go to the upside. Now, if this breaks down to the downside, that means people are scared and they're running back to Treasury bonds. If they're running back to Treasury bonds, that probably means that a crash is about to occur. Should we sell our stuff if a crash occurs? I'm probably not going to do that. I know how undervalued these are in relationship to gold, in relationship to stocks, in relationship to everything. But you could trim back if we see a 10-year yield spike to the downside and we see copper spike to the downside as well. That is a signal that a potential problem could be coming. Now, we would see that also in the dollar, and I've got the dollar here. The dollar is declining, which means that people are confident in the dollar and that this could potentially continue lower, which is going to be a complete tailwind behind our investments. Obviously, we're positioned for the commodity bull cycle. This bull cycle is predicated off of the dollar becoming less valuable, which means it's inflationary. If it's inflationary, this is going to push all of our investments forward and higher. So what we're seeing in the ratios is that the commodities themselves in relationship to gold are outperforming gold. That means that we're in a commodity super cycle. The next step is for gold to outperform the Dow. That will happen with time. We are going to measure it. We're going to see it in the charts. So we're going to continue to monitor these ratios. These ratios tell us relative value and how that value is being materialized over time. And what I'm seeing is that the commodities, the individual commodities, are outperforming gold, and I'm waiting for gold to outperform the Dow. The Dow is going to be propped up, same with bonds, with rates being held at or near zero. So I'm very curious how this dynamic is going to play out in the market in terms of how they're holding interest rates and how that's going to affect the Dow to gold ratio. I'm very confident that this commodity super cycle is coming and that we're going to see our investments push forward with inflation because of the real estate metrics. So I'm just curious to see how all this plays out with them trying to manipulate so many things in the market, them being the Federal Reserve. So we'll continue to monitor these. We'll see what they do. We'll see how they interact with each other over time. And my bet is that these will continue to outperform. We might see compression and expansions throughout time, given where gold's going to go kind of in the short term and long term. So this is your market update on ratios. I appreciate you guys listening. Subscribe if you haven't subscribed yet. If you like making money, click the thumb up button if you like this content. And I appreciate you guys listening. This is Finding Value.